Hey everyone, welcome back to Corporate Decoded, the place where we unpack the secrets hidden in plain sight within corporate filings. And in this sexy filling, we're going to get a peek behind the curtain of Artisan Partners Funds Inc. and their 2025 shareholder report. So buckle up because we're about to decode what this means for InVev. Stores. And before we dive in, if you are serious about understanding the real story behind company finances, make sure you are subscribed. And if you want to join the conversation and connect with other corporate insight enthusiasts, check out our Discord community linked in the description below. Alright, so what are we looking at here? Artisan Partners Funds Inc. has put out their annual shareholder report for the period ending the 30th of September 2025. And it is packed with details about how their various funds performed and what is going on under the hood, think of it, as a report card for their investment strategies. Now, usually when we look at these reports, the first thing that grabs our attention is the money. So let's talk about fund costs now, based on a hypothetical $10,000 investment. Investor shares for Artisan Developing World Fund ended up costing around $42. That is about 1.29% of the investment. Now, for the advisor shares, that is a bit cheaper at $124 or 1.13%. And for the institutional shares, it is even lower, hovering around $114 or 1.04%. This shows that while the strategy might be the same, the share class you choose directly impacts your costs. Let's move on to performance, because that is the real reason we're all here for the 1 year period ending the 30th of September 2025. The investor shares of Artisan Developing World Fund gave back a return of 19.47%, which is pretty solid, and they stacked up against the MSCI Emerging Markets Index, which saw a 17.32% return for the same period. So our Artisan Fund actually outperformed, met its benchmark last year. The report attributes these gains to a few key factors. Emerging markets did better than Europe, but trailed the US a bit, all with double-digit gains. China was a big plus for the index, while India was a drag globally. Equity markets showed resilience despite trade tensions and conflicts, rate cuts by central banks, and AI investment fueled optimism. On the portfolio highlights, top performers within the fund included Sea CrowdStrike, Grab Holdings, Tencent, and Netflix. On the flip side, bottom contributors were companies like Meituan, PDD Holdings, LVMH, Wistek, Global, and ASML Holding. Looking at the key fund statistics for the Artisan Developing World Fund, net assets stand at a substantial $4.3 billion with 36 portfolio holdings. The total investment advisory fees netted out at about $39.5 million, and the annual portfolio turnover rate was 77.88%. This tells us they are actively managing the portfolio rather than just buying and holding. Now let's quickly check out Artisan Emerging Markets Debt Opportunities Fund. For the investor shares, the 1 year return was 11.57%, outperforming the JPM-MB Global Diversified Index, which posted 8.52%. The report notes that emerging markets debt in general showed resilience despite global uncertainty, with strong returns from hard currency, local currency, and corporate bonds. The US dollar weakened against many emerging market currencies, which also helped performance. Moving to the Artisan Floating Rate Fund, investor shares returned 7.25% for the year, beating the ICE BOFA US Broad Market Index at 2.89%. Coupon income was the main driver of returns here, with prices rising for loans. The Artisan Focus Fund had a stellar year, with investor shares returning 23.44%, even beating the S&P 500 index, which was up 17.6%. The report highlights top contributors included Siemens Energy Rolls, Royce General Electric, Microsoft, and Broadcom, a strong showing indeed. Now let's look at Artisan Emerging Markets Debt Opportunities Fund. Its key stats show net assets of $134 million with a large 256 portfolio holdings. The annual portfolio turnover rate is quite high at 91.58%, indicating active trading. And then there is the Artisan Mid-Cap Value Fund. Investor shares saw a dip with a negative return of 3.52% for the year, underperforming the Russell 3000 index, which gained 17.41%. This is an important discrepancy. While the broader market was up, this specific fund lost ground. The breakdown shows top contributors were Expedia Group and Nvent Electric, but bottom contributors like Centene and Cable One dragged it down. P-Style color number 888. This is where we dig into the money part. Let's look at the financials for these funds. For the Artisan Developing World Fund, total investments held were over $4.3 billion. The portfolio is diversified across regions, with Americas at 34%, Europe at 7.9%, emerging markets at 43.8%, and Pacific Basin at 10.6%. In terms of trading currencies, the US dollar is dominant at 73.1%, with the Hong Kong dollar next at 9.2%, and Indian rupee at 7.2%. Sector-wise, consumer discretionary leads at 29.1%, followed by information technology at 19.4%, and financials at 20.2%. And what about the top holdings, Tencent? Holdings Ltd makes up 6.1% of net assets, followed by CLTD at 5.9% and Mercatolibre Inc. at 5.8%. The Focus Fund's key statistics reveal net assets of $1.25 billion with 42 holdings, but a really high portfolio turnover rate of 245.77%. That is active management indeed. Now let's glance at Artisan Floating Rate Fund here. Bank loans make up a massive 87.9% of the portfolio composition, with US dollar as the sole trading currency, demonstrating its focus on dollar-denominated assets. Top holdings for the floating rate fund are heavily weighted towards loans, such as Forest City Enterprises LP First Lien Term Loan at 3.7%, and TGP Holdings the third LSE First Lien Term Loan at 3.6%. Let's look at the long-term performance charts for the Artisan Developing World Fund. Investor shares a $10,000 investment from September 2015 grew to over $35,000 by September 2025, significantly outpacing the MSCI Emerging Markets Index, which grew to around $21,500 in the same period. The performance table for the Developing World Fund investor shares shows a 19.47% return for the last year, a respectable 4.60% for the 5-year period, and an impressive 13.56% for the 10-year period. Now let's check out the Artisan Partners Fund statements of assets and liabilities for the 30th of September 2025. You can see the different funds like Developing World leading with over $4.3 billion in net assets, then Emerging Markets Debt Opportunities at $134 million, Floating Rate at $86 million, and Focus Fund at $1.25 billion. The investments in securities section shows the actual holdings for each fund. Developing World, for instance, has a massive 96.3% in common stocks. These footnotes are important for understanding the details of specific holdings, like non-income producing securities, or those valued at fair value using unobservable inputs, which indicates higher risk. And what about the risks? The report mentions foreign currency fluctuations, credit risk, and general market volatility, which is pretty standard for these kinds of funds. What is really interesting is the note on fair value methodology changes for emerging markets debt, which moved from bid pricing to midpoint pricing. The auditors Ernst & Young LLP provided a clean bill of health stating the financial statements present fairly in all material respects. This is significant as it means no red flags were raised by their independent audit. The filing also includes the rationale behind approving the investment advisory contract for another year. This is a standard procedure to ensure the investment managers are acting in the best interest of the shareholders. The directors reviewed performance fees, scale economies, and potential conflicts of interest. It seems like the funds are performing well enough or have mitigating factors to justify continuing the contract. Alright, so what is the big picture here? Artisan Partners Funds Inc. has put out a fairly standard but thorough report covering multiple funds across the board. Many funds like the Developing World Fund and Focus Fund showed strong performance, outperforming their benchmarks. For the year, this suggests their investment strategies are working well. However, the mid-cap value fund's negative return is a definite red flag compared to the broader market and certainly warrants a closer look. The company also manages risk through derivatives and has a robust valuation process for fair value measurements. Financially, the firm appears stable with significant net assets across its funds, but the wide range of performance metrics across different funds shows that investment performance is not uniform, and investors should carefully pick the fund that aligns with their goals and risk tolerance. That is our deep dive into the SEC filing. What are your thoughts on these numbers and what do they mean for Artisan Partners Fund's future? Drop your insights in the comments below. If you found this breakdown valuable, hit that like button and subscribe for more corporate decoding. And hey, don't forget to join our Discord community, linked in the description for more in-depth discussions. Thanks for watching and we'll see you in the next one.